Why should I invest in you versus so many other firms that I have the ability to invest? And just saying, oh, I'll make money for you is not good enough. One of the things that we like to say is that based on our strategy, we'll give you access to a portfolio you're not getting access to anywhere else.
Kittu is a legendary venture capitalist
who invested into companies like RobinHood
and Box.
In the world of startups, it's not about skating to where the puck is today. It is skating to where the puck will be tomorrow.
Welcome back to Decoded. My name's Alfie Whattam, and this is the show where I speak to experts about what it takes to build great teams and companies. Make sure that you click the follow or subscribe button for more great content like this, and I hope you enjoyed the episode. So, Kittu, you've invested in unicorns like RobinHood and Box, some of the most successful companies in the world. What do you look for when you're deciding to invest in a startup?
So what I look for, Alfie, is I look for some kind of a non-obvious insight into why this company could disrupt an existing market very significantly, or potentially create a new one.
When you say disrupt an existing market and it has to be non-obvious, is that because the obvious stuff is, everyone's
if it was obvious, everyone would do it.
Yeah.
I'll give you the example of RobinHood. Okay.
Yeah.
So when I was looking at RobinHood, what RobinHood was doing, their kind of business was to offer trading at zero commission, right? And if you look at how brokerages have evolved, you had the full service brokerages from the likes of Goldman Sachs and Morgan Stanley, Bear Stearns, Lehman Brothers, all those guys. And then along came the discount brokerages, Charles Schwab, E-Trade, Ameritrade, guys like that. They were saying, no, we're not charging you on assets under management, but we're going to charge you on a per transaction basis. Then comes RobinHood and says, I'm wiping out the transaction. I'm not going to charge you by transaction. I'm going to give that away for free. So when I look at it, like, how do you make money then? How do you build a business?
The obvious question.
It turns out that I was on a board of a company where the independent director was the former CEO of E-Trade. And so I reached out to him and I said, hey, would love to chat with you about this company I'm looking at. And he then provided me with that non-obvious insight. And the non-obvious insight was this. He said, Kittu, how much of E-Trade's revenue do you think comes from transactions? So I was like, if you're a discount brokerage, probably a fairly high amount, what is it, 80-90%? He said, no, 33%. I was blown away. I'm like, okay, so if only that much is coming from transactions, where is the rest coming from? He said, it's coming from margin spread. What is margin spread? It's basically what they had done was they'd actually hired McKinsey, I think, to do an actuarial study. And what they found was at any given time, 30% of AUM at one of these discount brokerages is in cash. So what are they doing? And most of us, when we invest in these brokerage companies, we're not looking for a return on the cash because we don't expect to leave it in cash. We expect to invest. And so they're taking your cash and lending it to me, because when I want to trade on margin, they're lending it to me, and then I'm paying them a significant interest, and they're paying you a pittance, and they make the money on the spread.
You're right. That's definitely a non-obvious insight. Like the average person, even an investor in that world, does not go that deep into the thinking. So,
I mean, I don't even know if the founders of the company knew at that point of time. Because we were relatively early. At least,
just an idea.
I don't know if they knew it, but this was my thesis. So when I was investing in the company, I said, guys, at that time it was, if you accumulated all of the market caps, it was like a $7,500 billion market, very large market. And so if 1/3 of it is transaction revenue, you're wiping away, call it 25, 30 billion, but you're still left with a large market that you can go after. So that was kind of the non-obvious insight. So I look for that why now, and for this disruption.
It's like an insider secret that somebody knows, which the rest of the market, even the market leaders, they might not be aware of.
Exactly. And you might ask, look, why couldn't the incumbents do it? Classic incumbents dilemma.
Yeah.
These are public companies. Are you going to wipe away 1/3 of your top line?
Yeah.
Well, not till it's too late.
Now,
you look at Schwab and E-Trade and all those guys now, zero commission. But by that time, the horses are out of the barn. RobinHood is a $100 billion company.
It's interesting because like the box example is more of like a new one, because that market, I mean, it was what USB sticks and like a completely different world. The same philosophy, same mindset, same, going after something non-obvious that the rest of the world isn't really thinking about, but doing it in a way with a brand new technology rather than it being just an iteration on something existing.
And the other thing that I got excited about with Box was they made the conscious decision to go after B2B rather than B2C. Dropbox, on the other hand, had gone after B2C.
Yeah.
Box said, we're going to focus on B2B.
Yeah, they're going into a blue ocean. They're trying to avoid the chaos. Yeah.
We're not going to go, hand-to-hand combat with Dropbox. We're going to go. And I think, if I remember right, they were also the first to basically build out their own data center. So they were not using AWS.
Okay. Yeah, I mean, that's certainly a unique way of doing it. Everyone seems to be on Amazon. Okay, so what about hard lessons? Because you've been doing this for a long time, and you've met with thousands of founders. What's a hard lesson that you've learned as a VC, which most people don't talk about?
Hard lessons are, you pay a very big price if your evaluation of the people is wrong.
Yeah.
People say, it's team tech market. You can probably tweak tech. You can probably, pivot and go after a different market. But if you are wrong on the people, then it's a pretty big price to pay, because you're left holding the bag as an investor.
Yeah. And it's very hard to evaluate them if it's just on a pitch deck and like 2 1 hour long meetings. And we don't get a lot of time when the speed involved in these transactions. Like when I've done angel bets in the past, I mean, I've kind of moved to a point where I'm only betting on people where I believe I've got full conviction, because the window and the risk, if you don't have that, can be too big. And then you look back and then you always would blame yourself for that decision. And in reality, you probably, you should have trusted your gut a little bit more. But what is it that you're looking for in a team? Because everyone tells me this, but like what specifically in that limited time that you've got with some founders before you decide whether to give them the check or not, what are you looking for?
It's this non-obvious insight.
Okay, so the idea, but what about them as
if I walk
individuals?
into a meeting and I come out thinking, I learned something.
Yeah.
This entrepreneur, right, that I didn't know. This entrepreneur has basically zeroed in on a macro trend that's, emerging, that the rest of the world hasn't caught on. And he's come up with a disruptive business model and a disruptive technology to go attack the market. Boy, that's a dream scenario.
Yeah, and that doesn't happen most of the time. Most of the time, the idea is too obvious. It's not cutting edge enough. The team is not quite strong enough. They're not compelling enough. The go to market, the thinking about it isn't quite there.
Correct.
Yeah.
Okay.
Okay.
I mean, look, that's where you make the mistakes along the way. Look, if you look at venture capital as an asset class, the deal loss ratio of venture capital is probably right around 50-55%.
Yeah.
50-55% of your deals don't make money.
It's probably even higher than that at like super early stages.
Yeah, it depends on when you get in. You're right.
Yeah.
If you're a pre-seed fund where you're writing a large number of small checks,
Yeah.
your loss ratio is actually probably much higher, but that's by design. You're
Yeah.
not being that discerning in terms of, and that's by design, because you want to say, I want to kind of throw a wide enough net that I'm able to catch enough big fish.
Yeah.
And that's the YC model, right? For instance.
Sure. They're the extreme example. This is a quick message to tell you about my company, Alpha AI. We built Lisa, the world's first AI-powered recruiter who screens candidates for you on autopilot. You can make your recruitment process 10 times faster, 90% lower cost, and significantly improve the candidate experience, all with our AI agent for hiring. Learn more at welovealpha.com or click the link below in the description. And now, back to the episode. Okay, look, prior to venture, you were an entrepreneur yourself, and that's wonderful because I speak to a lot of VCs in the show who haven't built a business, and that's fine. Like, there are some incredible investors that haven't done that, but it is nice to speak to somebody that has been involved in the war and is not just on the sidelines. So when you've co-founded companies like Healthion, WebMD, what do you think separates those like truly great founders that really make it and become successful versus all the ones that we just talked about that don't quite make it, apart from the non-obvious insight, because that's obviously critical, but what about the personality? What about the character? What about the individual? Like what's important there?
Yeah, I think, one of the best pieces of advice I got was from one of the co-founders at NEA, Chuck Newhall, who is a legend of the industry. Chuck said something very interesting to me once. He said, Kittu, all successful entrepreneurs are innately schizophrenic. I'm like, Chuck, what do you mean by that? He says, on the one hand, they've got to be the best evangelist that they can be. The Kool-Aid they're making, they got to go sell it to everyone, saying, this is the best Kool-Aid that you have ever tasted. On the other hand, they can't afford to taste that Kool-Aid themselves. They can't afford to drink that Kool-Aid themselves. Right? You got to be paranoid about whatever it is that you're building. Most entrepreneurs, in my experience, tend to be self-indulgent. They have this confirmation bias. They're looking for people to say yes. Okay? And you say no, the problem is not mine, it's yours. All right? But the truly great entrepreneurs will take that feedback and almost embrace the no's to say, okay, how can I make this better so that I can convert? I won't take your no as a no, I'll take it as a not yet.
Mm-hmm.
And then how do I convert you into a believer?
Yeah. So it's about having the reality distortion field on other people, but not necessarily on yourself. You want to have the self-conviction, the belief, the obsession that it's going to work, but not, I think that's a great analogy, not drink your own Kool-Aid, like not delude and trick yourself and have your ego stop you from being and make you stubborn so you don't listen to the advice and you don't change. Like the best founders, in my opinion, they iterate so much. They're constantly tweaking stuff. They're constantly listening to feedback from customers, from investors, and just making it better and better till they get to product market fit.
Correct. And it's all about getting to that product market fit.
Yeah.
Right. And you have to have conviction in your capabilities and your core competencies. But how do you convert those capabilities and those core competencies into product that meets the market is where you need to demonstrate some flexibility and nimbleness of foot. Okay? So there's a fine line between being persistent and bullheaded.
Yeah.
Okay. And I think what you want to do is you want to be on the right line of that, which is say, hey, I believe in this, but at the same time, I'm not going to be oblivious to the feedback I'm getting. And I'm going to try to see how I can iterate and improve, right? While still keeping that vision, the purity of vision intact.
Mm. You can keep the end goal the same, but the way that you get there, that's gonna have to
And when I
change.
say vision, keeping the vision intact, vision is almost by definition a little murky, right? Because it's so far out, And so you can stay true to that vision, but your strategy and how you get from here to there, you got to be a little flexible.
Yeah. And the willingness and the speed at which you can change that strategy is so key, because you only have like 1, 2, 3 years really to make it work before you run out of money and before there's not enough traction to raise future rounds. So like you've got like a very limited window you got to be doing as many experiments as possible and shooting as many shots at the goal as you can to try and see which one lands and where it works and what you can double down on. But most people they just don't do it fast enough. They're too
100%.
slow, basically. Yeah.
100%. 100%.
One of your companies was Neoterrace, which you co-founded and then you eventually exited. What's a mistake that you see like new founders make which they should avoid? And I appreciate we've already talked about a couple here, about stubbornness, about not having an idea which is unique enough and special enough and is non-obvious enough. But what's like a common thing you see? You must have like spoken to thousands of founders, seen probably tens of thousands of pitch decks, probably more than that. Like, what are the common mistakes that you're seeing? You can make this super tactical with advice on decks, advice on pitching, but what could you share that could help people that are coming up on this journey right now?
Yeah, I'd say you have to have clarity of thought. And you have to be able to communicate that clarity of thought in a relatively short period of time. You have to be economical in your communication, both written and spoken. So, when you think about your company and the product that you're building, your positioning and your messaging is very important. I'll give you an example. Years ago, I met a company, and this was when I was running DECODED. There were these founders who had reached out saying, hey, Kittu would like some feedback. And they went through their pitch deck and they were doing something with unstructured data and things like that.
Okay.
And their last slide was, we want to be the oracle of unstructured data. And I was like, guys, that should be your first slide. Because you went through this entire meandering journey to describe what you're doing, and I didn't quite get it till you came to that last slide.
And if they started with that last slide, the entire thing would have made a lot more sense, I imagine.
Yeah. So, when you are pitching to customers, and customers are no different than pitching to investors, right? Because if you're able to convince customers to come on and give your product a shot, trust me, you will get investors to give you a shot.
Yeah.
I mean, when we built Neoterrace, we had 6 alpha customers who were actually trying out a product. Okay. And one of them had such a huge success story with our product. The guy said, you saved my job. When you're raising capital, you let me know. I'm going to be a enthusiastic reference for you. So when we went out fundraising, we had customers who were trying out a product. They were not yet paying customers, but they were actually trying out our product.
And you had a cheerleader. You had
We had a cheerleader.
an
In fact,
unpaid
we
marketing
made
person.
the cool thing about Neoterrace, the story is that, there were people that were our champions that we made celebrities. Because, if I remember right, the director of IT at Catholic Healthcare West was such a huge fan of our product that he was profiled on the front page or the cover of Information Security or something like that, one of those mags.
Yeah.
So I really come down to, this clarity of thought is very important for your own benefit. You have to have the clarity of that thought as to what am I building, what am I not building, right? What are my core competencies? What are not my core competencies? What are my current core competencies? What are my aspirational core competencies?
The
That makes sense?
point, it makes perfect sense. The point that you just made then that you finished on, I thought that was brilliant because you said you have to have clarity on what you're building, but also on what you're not building.
100%.
And people make that mistake because they try and build everything. They try and like Steve Jobs said, like real success is just saying no to 1,000 things and picking the one thing that you can work on. And this is the mistake that people make. They try and do everything. Just pick a feature, find an enterprise, do one thing that they do. But if you do it 10 times better at 90% lower cost, people are going to buy that because you'll be better than they are at that. It's David versus Goliath.
100% agree with you.
Yeah.
I should be interviewing you.
This is a two-way conversation. Nah, I don't have nearly as enough interesting stories and war wounds that you have yet, but I will get there. But look, if you were founding a startup today, given your past experience and what's happening in the world right now, being the craziest time to be alive.
Yeah, I view NeoTribe as a startup too.
Sure.
When I was thinking about doing NeoTribe, one of my primary focuses was, okay, what is that elevator spiel? How do I tell? Because, even when you're doing a venture firm and a venture fund, you still have to do product market fit.
Yeah.
Right? Because your LPs are, okay, why should I invest in you versus so many other firms that I have the ability to invest in? And just saying, oh, I'll make money for you is not good enough because everybody is going to say the same thing. One of the things that we like to say is that, we, based on our strategy, we'll give you access to a portfolio you're not getting access to anywhere else. And that portfolio is going to overachieve. And here are the results. Don't take my word for it. Here's my track record from NEA. Here's my track record from Fund 1, Fund 2, whatever.
Yeah. If you were doing this again, then like on the tech side, you were building a product, you were building, something in the world right now as a brand new startup. What market would you be betting on? Like venture aside, like if you were a founder right now building a tech startup, a software company or hardware, but what are you going after?
Yeah, I'd say, the thing that I would say is that I would first kind of zoom out and look at what are some of the tectonic shifts happening, right? Not just technology, but geoeconomic, geopolitical, things like that. And then figure out, do I have some capabilities and competencies where I can take advantage of some of these macro trends that are happening? Look, in the world of startups, it's not about skating to where the puck is today.
Yeah.
It is skating to where the puck will be tomorrow. That is when you generate open-ended returns.
So the first few years, they could be really challenging because you're
Correct.
building something which might not even be working right now. And I love that if you're zooming out from a larger picture, you're really going after the why now. Because like if there's been some legislation change or some huge innovation like AI or something, and you're building something in the case of AI, as the models are getting better and better, like there's a lot of very exciting companies building stuff, and it just doesn't quite work right now. But when these are application layer companies built on top of the foundation providers, and as they do a model upgrade, eventually it's gonna just work, and it will get better and better and better with each improvement without them having to really do much. I mean, they still have to work on it, they still have to work crazy hours and make it happen, but the core fundamentals of the R&D will just exponentially improve.
Yeah, I mean, you're going to be able to get the same amount of value with a lot lower cost.
Yeah.
Right. I mean, the AI part of it is a matter of when and not if.
Yeah.
Right. And I think what is interesting, coming to some of the, call it, non-obvious insights there is, if you rewind back to all of these technology disruptions, Alfie, and I'm old enough to have witnessed a bunch of these, all the way from PC revolution, internet web browser, mobile, cloud, and now AI, Gen AI. Initially, a lot of the value when you have these kinds of tectonic shifts accrues to the infrastructure providers.
Yeah.
Right. But over the longer period of time, most of the value accrues to the application layer.
Yeah.
And we're starting to see that in Gen AI. Now, if you rewind back to, say the PC, Microsoft had stopped just at providing the operating system, they probably wouldn't be as big of a company as they are today.
Sure.
Okay. I mean, who talks about browsers anymore?
Yeah, it's yeah. I mean,
Right.
there's been a little bit of stuff happening recently, but it's not as exciting as perhaps
About the only company that I think that has still monetized or dominated the monetization from an infrastructure point of view is Apple.
Yeah.
And that's because they have a vertically integrated closed system.
Sure.
But if you think about, cloud, same thing. Sure, the cloud service providers, the hyperscalers have garnered a lot of value, but boy, there are companies that build mega businesses on top of it. And now you're thinking about OpenAI and Claude and Llama and DeepSeek and all of these. At some point of time, look, I think we're going to be in a position where I would say commoditized, but little to choose between them. And then now it's like, how great of an application can you build on top of that?
Certainly. I mean, similar to mobile. I mean, look, Apple is magical in many respects, and obviously worth a ton of money, and OpenAI and Claude will there'll be similar winners in that world, but the real winners really with mobile were the apps, were the Facebooks and the Instagrams and the Snapchat and everything built on top of that. And I would be very surprised if the same thing didn't happen with AI. I think the agents and the workflows and the apps on top of those will become the unicorns.
Correct. Or unicorns, decacons.
Yeah.
What is the term for $100 billion companies?
I mean, it's just unicorn, decacorn, and I don't know.
Whatever it is, decacorn.
Yeah. I love the big thinking. Awesome. Look, this has been super useful for people that want to start a company, people that want to invest, people that are just generally interested in AI and startups. If people want to learn more about you and the fund, where should they go? Like your LinkedIn, your X, the fund's
email
website?
me at kittu@neotribe.com.
Awesome.
One last comment I'll make is, we talked about some of these tectonic shifts that are AI related, but if you just focus on that, you'd probably be missing out a lot of opportunity. And where I'm going with this is, if you look at it from a geopolitical point of view, the world is changing dramatically, right? We're getting increasingly a lot of politicians and leaders across the world have become very much more populist. And so, things are going to become much more onshored, friendshored, nearshored, right, from a manufacturing point of view. And so, uh, whether it is products that need to get built or materials that need to get supplied, whether it be at the supply chain level or at the end product level, there's lots of opportunity. And then there's also enabling technologies like robotics and things like that could
Yeah.
have a resurgence in a big way. So what I'm saying is not everything is going to be just AI related, right? And so I'll give you a quick example, right? We are so heavily dependent on lithium ion batteries. Okay.
Yeah.
But we don't have anywhere near the kind of domestic source of lithium as we'd like. And so, or anywhere near the amount of graphite as we'd like. Graphite is the anode in the lithium ion battery, and of course, lithium is the lithium ferrous phosphate is the the cathode. So that's an example of where, can you produce that domestically?
Sure.
That's got nothing to do with AI, but there's probably a huge company to be built there.
Yeah, certainly. Like as the world is running into one direction, I mean, there'll be a lot of money made, but at the same time, it does leave a huge opportunity for the other areas that people are less focused on, and there's less competition, but there's still huge TAMs, and like similar to what you said earlier, it's not a case of when. Sorry, it's not a case of if, it's a case of when, and I think that's still true with a lot of other areas as well. Yeah, it's just a matter of time, basically.
100%.
Yeah.
Great chatting with you, Alfie, and I hope you and your audience get something entertaining, informational from this.
My pleasure. Thank you for your time. Thank you so much for watching. Make sure that you click the follow or subscribe button wherever you're watching, and I'll see you in the next episode.
Introducing Lisa, the world's first AI-powered recruiter. She's an AI agent who works 24/7, screening candidates on autopilot, conducting interviews in 30 different languages, uploading all the best candidates to your applicant tracking system. Hire 10 times faster at 90% lower cost and significantly improve the candidate experience. Visit welovealpha.com to start your free trial now.